Hey, it's been a while since we've had an accounting lesson, but I decided to go ahead and go over the accounting equation. Remember that the accounting equation is assets equals liabilities plus owner's equity. And you always want to keep the left side equal to the right side. So let's also go over the capital account, which remember is the same thing as your owner's equity. You always have to start with the beginning balance, and then you would add in any investments or contributions made throughout the year. Then you would add in your net income if you have an income, but if you don't, you would take out a net loss. You also subtract drawing, and then whenever you add and subtract all of those numbers from your beginning balance, you end up with your ending balance of capital. Okay, one other thing, let's go ahead and go to the next page. We need to go over how you find net income and net loss again. So in order to do that, you just take your revenue minus expenses. If you get a positive number, you have a net income because your revenue was greater than your expenses. But if you get a negative number, you would have a net loss, which means that you had more expenses than revenue. So let's keep that in mind whenever we do these next examples. So for this problem, we have at the beginning of the fiscal year 2017, Gallow Company's assets were $82,647. During the year, assets increased by $8,942 and liabilities decreased by $2,795. At the end of the year, liabilities totaled $7,855. The owner made withdrawals of $15,000 and invested $5,000 in the business. So we have to figure out what was the total owner's equity at the beginning of the year, what was total owner's equity at the end of the year, and then what was the amount of net income or net loss. So in order to do this, the easiest way is just to set up a table with our accounting equation. So assets equals liabilities plus owner's equity. And we want two different equations, one for the beginning of the year and then one for the end of the year. So let's go ahead and start off with what we do know. I'm going to go ahead and do assets in blue. So at the beginning of the year, at the beginning of the fiscal year, Gallow's company's assets were $82,647. So that's how many assets they had at the beginning of the year. 82,647. Let me go ahead and fill in these equal signs here. Okay, and then it said during the year, assets increased by $8,942. So we know that assets went up by a total amount of $8,942. So I would just take those two numbers and add them together to get my ending number of assets. And when I add those together, I get 91,589. Okay, now let's move on to liabilities. I'll do those in red. So liabilities decreased by $2,795, and at the end of the year, we had a total of $7,855. So I can go ahead and fill in my end of the year because I know that exact number was $7,855, and they decreased. So if it decreased, I know that my original number at the beginning of the year had to have been more than what it was at the end. So I'm actually going to work backwards and add those two numbers together to figure out what my total for the beginning would have been in liabilities. So by adding 7,855 and 2,795, you would get beginning liabilities to equal 10,650. Oops, let me do that in red. Okay, so now we are looking at owner's equity, And since I have two parts of this equation, I can figure out the third part, okay? It's just like algebra. If you're just missing one piece of the equation, you can figure it out, because I know that my total assets has to equal liabilities plus owner's equity together. So you can work backwards by subtracting assets and liabilities to find owner's equity. Let's start with the beginning of the year. So I'm going to subtract my assets, 82,647, from my liabilities, 10,650, and that would give me a total of 71,997. Now let's do the same thing for the end of the year. I'm going to take my ending assets, 91,589, and subtract my ending liabilities of 7,855, and I would get 83,734. Okay, so we've already answered two of these questions. The first one was, what was the total owner's equity at the beginning of the year? So we just figured out that that would have to have been 71,997. Then the second question, what was total owner's equity at the end of the year? So we know that was 83,734. Last question is, what was the amount of net income or net loss? So in order to do this, we need to set up a T account for owner's equity, which remember is the same thing as the capital account. We're going to start off with the beginning balance of capital, which was 71,997. Also, if I go back up here and read at the very beginning, on the very last sentence of that first paragraph, it said the owner made withdrawals of $15,000 and invested $5,000 in the business. So we are going to add in the investment of $5,000 and subtract out $15,000 for withdrawals. Okay, I'm also going to leave a circle here for net income. I know it's probably going to be a net income since my owner's equity increased throughout the year. And then I know that my ending balance is 83,734. So we just have to find the missing piece, and that would tell me what my net income was. So you could start with your beginning balance, add in your $5,000 investment, take out your $15,000 withdrawal, and then subtract that from your final ending balance to get how much we had in net income for the year. And after doing that, you should get a net income of $21,737. So that would answer our final question for this example. Alright, let's do one more example together. So this time we have two different companies, Company 1 and then Company 2. It tells me the assets at the beginning of the year, because since this was in 2006, it would just carry over to the beginning balance of 2007. And then it shows me what the balance at the end of 2007 was. And then it also shows me any investments, net income or loss, and withdrawals that happened in owner's equity throughout the year. So let's go ahead and see what is missing and what we can figure out. Okay, if you need to set up a table just like what we just did, you can. It would probably help you, but you don't have to. I'm going to just to give you a visual and a graphic organizer to help you figure out what information we need to find out the answers to these questions. Okay, let's start with Company 1. So I'm just going to go ahead and box it in so we can keep our full attention on Company 1. I went ahead and made the exact same table as what I did on the last example. I know that my beginning assets were $11,419. And my beginning liabilities were $4,220. So I could go ahead and figure out what my missing owner's equity would be by subtracting the assets from the liabilities. And that would give you the beginning owner's equity to equal $7,199. Okay, now let's move to the end of the year. So now my ending assets were $16,790, but I don't know what my ending liabilities were. So I'm just going to put a circle in that place. Okay, I also do not know the ending owner's equity because I have two pieces of missing information. So we're going to have to do a little bit more work to figure out how to find the ending owner's equity. All right, so I went ahead and shrunk that, and I'm going to draw a T account for the capital for company 1. We did find that the beginning owner's equity was $7,199. I also know from this last box of information that I invested $8,000, so I need to add that into the beginning balance. I had a net loss, because it's in brackets, of $9,250, and we also withdrew $1,000 from the company as well. So if I just add up my investment and take out my net loss in drawing, I could figure out what my ending capital, or my ending owner's equity, would be. And that would give me a total owner's equity ending balance of $4,949. So I'm just going to put that in place of my ending owner's equity. Now that I know assets and owner's equity, I can subtract those two to find my missing liabilities. So I'm going to subtract $16,790 and $4,949. And I would get my liabilities to be $11,841. So on number 16 in the questions, it asks, the liabilities of Company 1 increased by what amount in 2007? So we're looking only at the liabilities for Company 1, and we just want to know how much did they increase by. So if I started the year off with $4,220 and ended the year with $11,841, we could subtract those two to figure out how much they increased by. And that would be an increase of $7,621. All right, now let's work on Company 2. So I know beginning assets for Company 2 are $15,760. Beginning liabilities are $6,290. And then I could go ahead and subtract those to get my beginning owner's equity. And that would equal $9,470. Okay, now let's move to the end of the year. So I know that ending assets were $43,835. Ending liabilities were $24,499. And once again, I can just subtract those to figure out, whoops, I wrote this one wrong, $43,835. Let me rewrite the assets real quick. Okay, $43,835. There we go. So subtract assets from liabilities to get ending owner's equity. And that would be $19,336. So the three questions we need to figure out is what was the owner's equity on January 1st, which would be beginning. So we just found that. Beginning owner's equity was $9,470. All right, then what was the amount of owner's equity on December 31st, 2007? So that would be ending owner's equity, which we also have as $19,336. And then last thing, what was the amount of net income of company 2 for the whole year of 2007? So we'll have to draw a T account. We know that beginning was $9,470 for owner's equity. Also in this box here, I see I invested $10,000, or the company invested $10,000. I don't know the amount of net income, so I'm going to leave a circle. But I do know that the amount of withdrawals is $500. And at the end of the year, the balance should have been $19,336. So after you add in your investment, take out your withdrawal, and then subtract the difference, you can figure out the missing net income. And you should get a net income of $366. Alright, that's it. Let me know if y'all guys have any questions with this assignment.